Welcome to Momentum Monday, Howard.
Look at that snazzy opening that we haven't figured out how to integrate. Huh? Not bad there. Not bad. My friend Judd put that together for us. I appreciate it. And as you, if you're watching, welcome everybody. Let's get right. This show is about trends and momentum. It is called Momentum Mondays now, not just Momentum Monday. And for the first time, our friends at MarketSmith, who I've known forever, and IBD are allowing us to use their charts and sponsoring the show and allow us to put some graphics together. So thank you, everybody at MarketSmith. Okay, so Ivan, let's get to the markets. There's so much to cover. I want to talk about trends that are working and stuff that isn't working and stuff that might work. So let's start with the S&P so people have a picture of the world that I care about.
All right, let's start with the big picture real quick. As you can see, the S&P 500 tested a few times its 200-day moving average, and the buyers kept showing up. Now it's back above its 50-day, and it's setting up beautifully for a potential breakout.
Yeah, I mean, the markets just will only bend, and only it's a BTFD market, which StockTwits calls it, which is it's been a buy the dip type of market. There's healthy rotation, which we'll get into. And that's the S&P. I mean, for a new thing here, I want to show you put a screen together of the world. So, and people can call us or ping us. Not call me. Don't call me. Ping us if you want this screen. But FinViz, I haven't put together a screen of the world markets. So the S&P tells one story, which I care about. But if you want to see what the world is, I haven't put together a world. Is this it? Is this it, Ivan?
Yeah, this is the entire world. The
47 countries?
Yes, country ETFs. And as you can see, the best performer year to date is Saudi Arabia, not surprisingly, with crude oil.
That's KSA?
KSA, yes.
Egypt. Okay, and what's PGAL?
Portugal. Very surprising for many.
I thought that was a country of only women, PGAL. Okay, so it's Portugal, which is a great place. Everybody's going to Lisbon these days. Don't know why it's working. A lot of tech talent in Portugal, actually, and it's pretty liberal now. Portugal.
I've never been. Hopefully, I'll go one day.
No, Ivan, you have to work. Okay.
Okay.
You have your own show. That means you can go. Okay, so that's Portugal. Scroll all the way down, so we can see. And worst country in the world, Ivan, is right now.
Turkey.
Yeah. You run a stupid government like that, you're going to have a shitty stock market. Although Egypt is, and what's IDO?
It's Indonesia.
And then EPHE.
EPHE, that's the Philippines. So you can see that emerging markets are definitely struggling.
So this is interesting. People say Trump is autocrat. And if we look at the autocrat markets, Philippines and Turkey and Russia, which is a pile of shit. Boy, there's some breakdowns though in the world. Vietnam, which was a hot country ETF, Brazil, which was hot country ETF, is breaking down a little bit. Anyway, so it's not all, a month or so ago, it just looked like the world was breaking out, and you can see some of the correction. So that's why I wanted to pull that screen up. That's interesting. So, and United Arab Emirates is kind of flattish to down over the last year, despite the price of oil. So it's not perfect out there. The S&P actually looks pretty good relatively to the world.
It's about in the middle. I mean, especially compared to Mexico. Look at Mexico in the past 4 weeks, like a complete meltdown.
Yeah, I wonder what that's from. Is that just from our politics, or is that from the dollar? I don't know. Okay, so, and oil is strong. So let's go back to the S&P. So, still in an uptrend, but more than that, it's a market of stocks. Ivan and I don't trade the indexes. We look at the indexes, and then we drill down into stocks. So, Ivan, let's tell me what you're seeing.
In terms of individual ideas,
yeah, let's get right into it.
Okay, let's go. Netflix, for example, continues to act amazingly. It's been #1 on my list forever, and today it showed.
How many weeks? How many weeks, Ivan, on the list?
Let me double check. 14 weeks. So this is the 15-week.
So 15 weeks. It's been in and off the list, but the last run's been 15 weeks. So it's been one since the beginning of the year. So since that breakout in...
It just continues to act super constructively. And I mean, they continue.
They're the homepage, right? It's like the Yahoo of 99, right? It just endlessly, you know, I spend two hours an evening on Netflix. That's my home screen at 9 o'clock on till I go to bed, between that and YouTube. Okay, so Netflix continuously. What else?
Netflix, another one I'm watching. It's Alibaba. It's the basically like the Amazon of China. It's starting to set up again on multiple time frames. This is a daily time frame. I think if it manages to close above 200, we might see a run towards 220. So this one,
if it gets hot, that'll make a trillion. That'll make a trillion, maybe ahead of everybody.
It's possible. It's possible, but I think Apple will be there first, just because they're so close. Yeah. Another one.
This is one that I've owned. This is security stock.
We talked about it. The 200 was a really important area. It's already trading above 200, so it's just slowly climbing the stairs up.
It's not letting anybody in, right? Like these pullbacks now, but it's this last year, it's just once it broke out above 150, it's just kind of, you know, just quietly. I mean, it's one of those stocks that could gap up 50 on you. So it's like you have to be in this. I'm in it. It hasn't, you know, it digested that massive run through 2015 over 3-4 years. You know, they're in the Cisco space and the infrastructure space. It's not going to be easy for Cisco to buy a company like this, but the ultimate exit is probably a Cisco, and until then, they have a lot of free room to run. And it's in the security space, so it's, you know, it's a name that no one really covers. Relative strength 94. I think that's my favorite idea for traders that want some high beta and something that hasn't gotten away. You know, you're breaking out of it, you know, from 2015, you're still within. Anyways, I love this company. It's in the right space. Enterprise. It's got A rating, 94 relative strength, earnings exploding. I don't know if you're a momentum investor, which we brought up a few weeks ago. It's something above 200 that you got to try it. Okay, so that's Palo Alto. Netflix, Baba. Let's go to Baidu. It's something that really had a great breakout and just reversed. This is what
it's a really weird situation. After their COO announced that he's leaving the company, the stock just sold off substantially. I mean, more than 10% just for one person leaving the company. Like, I don't think anyone is that important in any big company, but apparently the market doesn't think so. So,
well, let's explain why. Okay, so let's explain why. First of all, this can happen. So when you're trading momentum, I think what's more important to talk about things that go wrong. So you had a relative strength stock that was breaking out to all-time highs.
Yeah.
From a sloppy base. So it wasn't some clean base, but it was definitely a massive breakout that looked takeable. And we took it and it gapped up like 30 points. Now it's completely reversed. So I think it's important to study this for a minute and go, what went wrong? Unless you had inside information, you would not expect the CEO of a stock like this to be leaving after 20 years or 15 years. And so the market has every right, you know, to surprise the market and shocks. This is a fundamental change, you know, and when there's so many great stocks to choose from, the question is, Ivan, what do you do here?
It used to be on the SL50 list, and it was removed for this week, so it's just out of the list.
Yep. So I think what you do here is if you had a win, sometimes wins turn into losses. There's so many good ideas. I think you can revisit it back above 270, but your first loss is usually your best loss. And unless you're a trader, and this is a major fundamental change in company. You know, one person does not make a company, but you know, it's going to take some time for people to get comfortable again in that massive volume. So obviously we could see a bounce, but it's never good to see this reverse. Relative strength drop to 60. Ivan said it dropped out of the SL50 list. I say you move on to better ideas.
Yeah, I mean, there are a couple more Chinese stocks if you're let's stay on China, that are looking interesting. For example, New Oriental Education, today they try to break out, but unfortunately they finished near the low of the daily range, which is never positive. But it's looking decent on a weekly time frame. And also the other one, TAL Education, it just keeps making new highs.
Education stocks doing well too?
I think yes, they are. For example, which one?
Grand Canyon, maybe, or
well, give me a symbol.
Lope is one. No, Lope, L-O-P-E.
Yeah, exactly. Yeah.
So you're using MarketSmith right here. That's great.
Yeah, I'm using MarketSmith. Yeah, I mean, you can definitely see that.
This is right down the street from my house.
They doubled since December 2016, and you can see that they even have the fundamentals to back up.
Running this like a call center, basically, this school. It's amazing what they built in the middle of nowhere. Cheap real estate. They're running like a religious experience over there at Grand Canyon. So congrats to them. I just hate the whole space. I hate everything about the education system. It's a great business, and these stocks prove it in China. So I think the Chinese, man, what a racket in China. So I've avoided this space, but obviously I think if you're going to play this space, you stick to China because they're just printing money. I can't own Grand Canyon because I live next to this thing. I don't believe anything about it, but the school's thriving. But if you wanted to play this education space, I think China's just a great way to play it because it's just so massive. Okay, what else, Ivan?
I think Twitter is starting to look good again. I mean, even for a new entry today, it gave a new entry. If you're a swing trader, today was a good. The
business, hate almost everything about the company except the product and the opportunity. There's never been a company that it's just constantly frustrating, but I've given up being frustrated and just used the product too much to not own the stock, and it's worked out since the low 20s, setting up again. Like I said, this company is massively undervalued in terms of the true value of the network. Now, to figure out what the value is, nobody knows. That's also the opportunity. It's also, if the mood of the market changes, Twitter will drop 30–40%. If the mood of the market stays flat to strong, I think the stock massively outperforms for the next 3 years. I think crypto Twitter is huge. I think FinTwit, as obviously I started StockTwits, but financial Twitter is completely undervalued. We just saw Robinhood raise money at a near $6 billion valuation. Coinbase we're talking about $8 billion valuation. Everybody who trades on those platforms relies, if you want to trade, you're not buying Wall Street Journal, you're not watching CNBC if you're a millennial. You are on StockTwits or Twitter or Telegram or Reddit talking about stocks. Twitter is the place. This stock in a good market is $60.
Yeah, I agree.
Especially with their crappy model. All they got to do is an announce. I mean, they could go buy Robinhood for $10 billion tomorrow and the stock would go up. They could go buy Coinbase for $15 billion tomorrow and Twitter stock would double. Now, I don't know what Jack has plans with Square. Let's look at his other company, Square, quickly. I mean, incredible. Look what Jack's done. Like CEO of two massively multi-billion-dollar companies. Now, I don't like Square, but because I think, it's an American phenomenon, and we can see that PayPal bought Square's competitor in Europe this year. Square's competitor in Europe last week. Pull up PYPL. So you can see PayPal saved themselves, right? Stocks started to look really weak, but this acquisition was really important for them to kind of show that they're really willing to go at it with Square. So this was a really interesting acquisition by PayPal. They probably overpaid, but the market's happy. So again, this is like the market's kind of taking care of itself. PayPal versus Square is a great battle. So going back to Twitter, Ivan, sorry.
Both of them look constructive. And if you go back to Twitter, as I said, if you're a swing trader, today was an entry. If you're a position trader or trend follower, I think above 35, we'll see a lot of new money.
Yeah, the problem with Twitter too is if you go to the monthly, Ivan, or the weekly, you can see all the overhead. It's still fighting off its IPO. So I just don't see this stock getting away ever. First of all, because like I said, the business isn't that well run. It's still a media business. You know, their data business is a great business, but it's not a majority of their business. But again, if they said no ads tomorrow, we're going to focus just on transactions and data, and the revenue took a 60% haircut, I honestly think the stock, and they laid off 2,000 people, I think the stock would double. So that's why I like Twitter. Okay.
I'm looking at the numbers, and you can see that in the past 3 quarters, that's a substantial.
Yeah, but the advertising business degrades the product, because then you get into like attention and spam and all the crypto spam. I mean, Twitter still has massive, I mean, they're good problems for Twitter because they're growing, but massive problem because they're a media business over a data business. And I don't think the stock ever gets away from people because, again, the history of running a poor business, and selling ads is not a good business unless you're Facebook or Google. Okay, next, Ivan, some more ideas?
I think there's some interesting ideas in the financial space, especially today. I mean, with the interest rate rising, we're starting to see many regional banks and other financials breaking out. Yep. And for example, this one, ASB, broke out to new.
So they're all small cap. So I mean, let's go back for a second and talk about regional banks, because this is the small cap index, IWM, which is in an all-time high. So we went through the world and you could see the congestion. Here is small cap, 2,000 smaller cap stocks in the United States, all-time high. So of all the markets around the world, US small cap, you know, you can read all the headlines. I mean, take a picture of that. That is what a bull market looks like.
Yeah, it's a very interesting divergence. While emerging markets are struggling, we have the US small cap index at new all-time highs. I mean, this is like a true market of stocks. And
the best market of stocks I've seen since '99.
Yeah,
it's really one of the most incredible, where guys like us are yelling out ideas and they're working. And the ones that don't work, just get out and find something that's working, like we're going to have to do with Baidu. But you know, you can't attach yourself to losers when the index of 2,000 stocks, which includes a lot of smaller financial companies like that you've never heard of, breaking out to all-time highs. Okay, so now let's go to the financials that you were starting. Now people have some context of why financials are working.
Well, as you mentioned, interest rates are rising, and that's typically good for the bank's margins.
Listen, Wells Fargo still paying me 20 basis points on my cash, and you know,
but they're lending your cash at a lot higher interest rates, and they're raising.
Margin is they're just printing money right now for free.
Yeah, a couple names they're looking interesting to me. American Express, I think it's setting up for a breakout around.
This looks beautiful.
102, 103 area.
Hate them.
Okay.
But unbelievable looking chart, Ivan. Wow.
Yes.
Okay. Bank of the Internet, San Diego Bank, looks great.
I think it's also setting up.
It's been through all kinds of turmoil in the local papers and Wall Street Journal over the years for bad business practices. I know the founder and the board there. I've owned the stock in the past. The stock looks phenomenal. It's a great environment for them. Go back a longer period on Bank of the Internet, Ivan. So they have no branches. You can see that crash in 2015, and it's slowly go back to, you see that crash after the incredible run post 08. It's now chewed through that crash in 2015. Okay, that is not what happens in bear markets. So financials do look strong. I'm playing the financials, as people know, through Schwab and through Noah. Let's take a look at Schwab. We talk about a boring winner. You know, I don't know. It's not giving you it looks overvalued every day, not giving you a chance to enter, and it's been straight up for 4 years.
Yeah. unbelievable uptrend. And let's take a look at
Noah. Take a look at Noah, which was my play for Schwab of China. Which, if you want more action in your portfolio, now it's too extended. Listen, you can't chase these up here, but they're like Ivan says, like find some financials that are breaking at a strong basis, or any that you started with one. Ivan, what was that first one?
The ASB, because it's on the SL50 list, that's why I mentioned it.
So it's on the SL50 list. This is a Green Bay, Wisconsin. Awesome. No one knows this company. Earnings are ridiculous. I don't know the book value. I don't trade banks, but this is an unbelievable breakout.
Yeah.
But it's not growth stock. It's just, depending, if you like banks, there's a bunch out there. Is there any other ones that show up on our list?
Banks, not yet.
Okay. But Noah's on the list, is it not?
Noah is on the list, yes. But as you mentioned, I also think it's extended for a new entry.
What's really interesting is I got stopped out of Goldman after forever. Let's take a look at Goldman. So, I mean, talk about what is that? The 50 crossing the two relative strength?
Yeah, it's trading below 200 even.
Gee, I'm out of this I got out of below 240 or 250. Yeah, it's just weak. It would take 2 good days for this thing to look strong again. So that's why it's hard to short stocks right here. But I'm telling you, there are some signs. If you look at the world indexes rolling over, some of them, and you look at some stocks, it's not perfect. It's not easy. That's Malaysia, the emerging markets.
No, this is the overall emerging markets ETF. This is Brazil, for example. Definitely.
That's in Brazil. So now the 50's crossing the 200 there, Ivan?
Yes.
Yeah, not a good sign. So listen, it's not perfect out there. And that's what makes great markets, though, when people are nervous. So you got to really be in the right stocks. But I love this type of market. Okay, some other names?
One that I think is looking very interesting is Movado. I mean, many people don't know that.
Watch company?
Yes, this year the best performing S&P 500 stock is actually a watch company. It's Fossil, and this is another one, Movado.
Fossil, FOSL. Where's that?
It has doubled year to date.
Okay, but yeah, I mean, a lot of retail stocks have done this after being down 90%. But Jesus, yeah, we're at, yeah.
But Movado is looking decent as well, and it's not just the chart. Look at their numbers.
Yeah, those are great numbers. I don't trust that company. I don't like the product. I love watches. I don't love that product. Okay, so Movado. Okay, that's a good name. Is that on the SL50?
No. Yeah, actually, it just joined the list.
Okay.
And then another one. It's a cheap name. Micron. They just announced a $10 billion stock buyback. I mean, it's not a name that you need to chase, but it's just a good
semiconductor. Okay,
so bellwether of the semiconductor industry.
So basically, you have semis and financials and China. I mean, talk about risk on in sexy and enough great stocks to choose from. Okay, what's not working? And then let's do what's not working and then what could work. So what's not working? Consumer products. I think I sent you a
consumer staples. Any high yield stock, and again, it's because of the rising interest rates. Like if you can get 3% on the 10-year US bond, why would you put your money into a Coca-Cola to get 2% yield? And you have the downside risk of.
I don't know. I'm intrigued here because I sent you a chart within this index. There are some winners like Dr. Pepper. So consumer staples. I sent you a chart earlier today. Yes. Okay. So look at this. Look at the carnage in the 1 year here. I don't know what Cody is, but General Mills down 23%. Campbell Soup down 36% 1 year. Holy smokes. Kraft down 30. Philip Morris down 30. Monster Beverage getting killed. Pepsi's taking on Fizz right now, which was the hot millennial brand. So this is like a feast or famine industry. I think there's going to be some massive comebacks. Again, I don't like to trade broken names, but I think and I like Johnson & Johnson, which isn't in here. It's more healthcare, but also a consumer product. But if you look at Procter & Gamble, these companies, and even Campbell Soup, they have made acquisitions. They are trying. And a Campbell Soup you can't touch. But, I mean, at some point, private equity are going to swoop in to some of these brands. They're still cash cows.
I think Costco is looking the most interesting in that group. I mean, Costco, price-wise, they're looking the most.
So I was in a Costco for the first time in like 30 years this weekend, Ivan, and it's just so clean. If you are one of those people that likes to spend money, it's hard to go into a Costco and not just go bananas. I don't shop, but I had to go get a dog for our dog. I had to go get some medicine. And I hadn't been there. I was scared to go to the Costco. It's so daunting, right? But it was so well organized, the way they flow people in and out, and the parking was good. I mean, what a great company. And I didn't even need my card. I didn't even need my card to go in. I thought you needed a card to go in, like a membership card. I'd walk right in.
No, actually, you need a card.
I didn't need it. I said I was going for a pharmacy, and they didn't have to show a card.
Maybe for the pharmacy.
You needed to check out. But I bought some pills for my dog, and she needed a prescription. So, I mean, my wife has a card, but I didn't have to show my card. Okay, so Costco, amazing, looks great. I just don't own it.
Yep. I mean, there are quite a few other ideas. We can keep going on.
We'll pull up the SL50 list, and we'll just quickly scan it. So Ivan and I have this list. It combines many momentum factors and some social factors. And you can see what's on this list. Software continues in e-commerce and media. And again, Netflix is e-commerce, media, software, right? So who do you see at the top? Netflix, then Shopify, which we've been long, which has definitely some sketchy press coming out about and then Bazoon, which is Shopify of China. Then you have Tableau Software, which is now 12. It's had a great run. Quietly, no one's heard of it. You got Twitter, Grubhub, ServiceNow, a lot of enterprise stocks. So a lot of the stocks that are on this list are how we find our ideas. And Ivan, your product is $99 a month?
Yep.
Okay.
99 7-day free trial if you want to check it out.
Ivan in your back pocket. It's incredible. How are you liking the MarketSmith charts? I love them.
I love the product, yeah. I mean, just having the ability to look at the fundamentals and the technicals in one screen, it just saves a lot of time.
Yeah, they're crazy that they haven't integrated StockTwits in a better way. I have to talk to them about that. But the product's just devastatingly good in terms of giving you a picture. Look at that art. So what people don't appreciate about it, charts. This is I call it chart art. Let's go back on Costco and look at a monthly. Great stocks tell a story. Okay, this is not a complicated company, Costco. The product hasn't changed in 30 years. Because I swear to God, I just walked into a store and it was like I was walking back in time. The store's same concept from day one. You know, other than I didn't know about the membership thing and I got in without it. Look at that trend. Now all great stocks with simple ideas have charts like this. Of course, there's crashes along the way, as you see in Costco. But look at the blips in the history of time. Great brands with simple concepts. You go back and look at Netflix. You go back and look at Nike. You go back and look, and I think you'll go back and look at Procter & Gamble in 10 years, PG. This is why I wanted to talk consumer staples. And, well, maybe not Procter. I mean, that's interesting. It just hasn't. It's not a growth business, but I think there's something they can do. But maybe this double combination of Amazon and retail, like combo, is really. You can see the divergence in the S&P relative strength versus. So bottom fishing here is a dangerous game. Okay, so what I was saying is about chart art. It's amazing how much you can learn about a company by looking at a 20-year chart. Really is amazing. Pull up Nike, Ivan, at all-time highs. Stock that I've owned forever. I mean, how do you stop this company? Only Nike can stop Nike. I mean, how do you not, as you're buying your kid one stock, I don't know how you can't feel comfortable owning the swoosh. Let's take a look at Disney, Ivan. Starting to firm up a little bit.
Yeah, they finally managed to break above their 200-day last week on the news
Still
that
in no man's land in terms of the last 3 years. But I tell you what, if this gets above that 115, 120 area and the market stays strong and they get this Disney Flix launch, the stock starts looking like a Netflix in 5 years. You got to take a look. So again, now we see Disney not from just the last 3 years using MarketSmith. This is a monthly chart going back to 1993. How much is MarketSmith, Ivan? I think we have a $20 3-week trial.
I think they do, yeah, $20 three-week trial. I'm not sure how much is it a month.
You're a student of the market, and most of the people listen to Momentum Monday just love the markets. You have to have this weapon in your arsenal. Ivan's a millennial. I don't think you had heard of this company 3 years ago. Maybe you had.
Which one? Walt Disney?
IBD. No, IBD.
Yeah, no. I've been reading IBD. I've been reading for 10 years, so I know about that company.
No, you know about, but you wouldn't have thought, if I hadn't brought it to you, you wouldn't have thought of putting this into your arsenal.
Yeah, probably.
It's really a great tool. The data is just unbelievable. Okay, so hope you guys enjoyed. Thanks for watching. Ivan, anything last thing to add?
No, that's it, Howard. Have a good week.
All right, have a good week, everybody. We'll see you next week.